Hi, welcome to today's market view for Wednesday, 15th of October 2014. And starting off with the 5-minute chart, you're probably looking at this now and saying, well, why have you got signals and I haven't? Well, what got me thinking yesterday was I received 2 emails, and both were about me not having any signals on my chart and they having a couple of signals on theirs. And I know what it was. It was down in the settings here, down in the trade markup, and it's to do with only markup trades on bars with a range of no more than, and this is generally set to 20. If I click apply, we just see the one signal there. Well, this got me thinking yesterday because we've been missing out on some trades, and the setting that was in the other 2 queries that I received was set at 35. And there you can see we have the signals appearing on the chart. And as I say, this got me thinking, because really it doesn't matter what the bar length is or the number of bars in the range that's important. It's the amount that is actually at risk. But the reason, first of all, why we're not getting the number of signals that we should do is because of this limitation on the range. And the market at the moment, if I just have a quick look at the implied volatility, we have a lot of volatility in the market at the moment. So what's happening is the market is trading a bigger range for each individual bar. So what's the solution? Well, there's probably a halfway house here, and I was messing around this morning and took this down to 25 and clicked applied, and this seemed to tidy the chart up quite nicely. And if I just go back to Monday's trading session as well, which I'll drag the chart over to the right there, you will see the same thing here as well, where we had 2 nice trades, and in particular the final one of the trading session there. So the next thing is, if we are to alter the settings, and of course all of these settings are down to the individual's trading style as well, you can alter them to suit your own aversion to risk. And what you can do is this. Let's for example click on PTP there, mark up this PTP, and we can see that we have a 38-point potential risk for only a 20-point gain down to the BRN there. Let me just pop this on this so I can tell you exactly what it is, the 16,400 level there. So it's a case of, do I take the trade or don't I take the trade? And if I take the trade, how can I reduce the risk? So what I'm just going to do is just to drag the entry point out a bit there. If you right click on the entry price, you'll notice you get this contextual menu, and then there is this risk management guide. So if I click on this, I get this window appear on the left. You can place in your account size, the percentage of risk that you want per trade, if it's 1%, 2% or whatever. So let's just go with 2% at the moment. We can see that we've got the code there for the market we're trading, the entry price, the initial price, the points at risk, and you can see the maximum capital risk per trade based upon 2% of 1,000, and the maximum stake is 52p. So I know I can actually quite easily take this trade at 50p per point with a proposed risk of £19.20. And of course that's got to take into account the initial spread of going into the trade as well, and any other sort of fast moving market if you were to try and come out of the trade as well. But as a guide here, you can see that this trade is possible by risking 2% at 50p per point there, and then thereby allowing you to actually take the trade. It's just a thought. Of course, it's a slightly inverse risk, because you're risking 38 points to only get 20. But because of the range of the bars at the moment, it is a way for those of you who wish to have more signals on the charts at the moment, a way of actually doing this. And there is an old school theory as well, and this is something that I've advocated for years, from trading the commodities via telephone to the US in the early 90s, that most people lose money trying to avoid losses. So you can have the stop too close and not allow for the volatility of the market. before the market turns around and then trades in the direction you want it to go. It's okay having a short stop, but if the volatility is quite high in the market, then there is a chance that you'll be taken out and then see the market go in the direction you want it to go in. So I thought I'd just share this with you this morning so that you can have a look at it and also play with it and see what you can actually do with the individual settings to suit your own trading style and also risk aversion to come up with possibly a way of increasing the number of signals and also a risk level that you're comfortable with by adjusting the, if I drop this down to 1%, you'll probably say, well, I can't really do that trade because I'm going to be risking too much. It turns to red to alert you there as well. But if you're happy to go with 2%, or if you're trading with GKFX, you could drop down to 10 pence per point, and you could increase. You can see what you can do there. There's all sorts of variables that you can do there. So I would suggest that you play around with this. And just to recap, what you do is you place if I just remove this, let me just show you from the start, and we'll pick another one. So if we go to this sell signal here, mark it up, right click, and then left click on risk management, and then you can modify accordingly to suit yourself using the risk management guide on the left hand side here. Right, so moving on. Yesterday, obviously the market traded higher to begin with, and then again towards the end of the session sold off. And in the daily chart, you can see the market coming off the high just there. But we are finding support down at this level, which is no surprise because the implied volatility has doubled at this time. So expect a bit of a rally in this market. On the news front, what have we got? Anything after 2:30? We've got ECB President Draghi speaking at 7 p.m. This evening. Anything at 3 p.m. business inventory is not really going to make a big difference. Anybody that's trading the UK markets this morning, there is some other economic news out there. And finally, the implied volatility. You can see again the doubling of implied volatility from around the 9% area to the 18%. And it's a case of just waiting to see what the market's going to do from here. A bit of a dead cat bounce before resuming the downside. And the way to see that is work on a retracement of the implied volatility, which I will monitor for you. Right, that's it for this morning. I will see you in tomorrow's market view. And have a good day. As ever, thank you for your support. Very much appreciated. Any questions regarding the risk management, please do get in touch. That's what we're here for. So until the next time, thanks for watching. See you soon.